Hey guys, George Hyman here with the Loco Rico podcast. We condense and simplify current economic trends to empower busy middle-class investors. This is a short-form version of our podcast, and we will be releasing these in a bi-weekly manner. Today's topic, we're talking about the ratio of stocks to gold, specifically the S&P 500. This chart right here, it shows the price of gold divided by the price of SPX, or the S&P 500. What this chart shows us is how fast gold is moving or the stocks are moving in correlation to one another. We're comparing apples to oranges, but the reason I'm doing this is because gold is a very good tracker of purchasing power, and it gives us a good idea of where capital flows are going. Where are people putting their money? And I have a chart here that beautifully displays this. Just forewarning, I did not come up with this idea. This is from Patrick Kareem at North Star Bad Charts. If you want more information on this, I highly recommend looking him up on Twitter at Bad Charts, or you can look him up on YouTube at North Star Bad Charts. But basically, Patrick put together this chart here, and it shows us how many shares of S&P 500 you would need in order to purchase 1 ounce of gold. And it's a beautiful way to illustrate how gold performs in high inflation environments compared to equities. When inflation is high, you do not want to be in U.S. equities because of the fact that the dollar is depreciating much faster than the stocks are appreciating. It's hard for businesses to operate in a high inflation environment, thus profits decrease and stock prices decrease. What performs very well in high inflation environments is gold. People cling to gold in times of economic scarcity and danger to preserve purchasing power. Gold is indestructible. It's a way to preserve all the labor of your work that you've done your whole life, because it cannot be destroyed. It cannot be recreated. It has very good substance. Everyone in the world accepts gold as currency, and it has been that way forever. So gold is a very good measuring stick of purchasing power. And when we compare the stocks to gold, it shows us where people have more confidence in. And this chart, I think, is going to show us really cool comparison to previous high inflationary environments. So if we look here, this is in this little zone right here, okay? We start out in 1971, right around the time that the gold standard was taken off of the U.S. currency, and the dollar was no longer backed by gold. What happened was, right here is when you see the value of the dollar depreciating overnight, and you're seeing that through inflation. If we go back and look at what the inflation numbers were from 1970 to 1980 in this period, inflation was very high, and it was a bad time to be in stocks. And this chart displays that because it shows us that at the peak of all this, in January of 1980, you needed 7 shares of the S&P 500. Right here is where I'm looking at. Okay, right here up top. You needed 7 shares of the S&P 500 to purchase 1 ounce of gold. Now, if we fast forward to 2000, the start of the dot-com era, okay, you needed a whopping 0.22 shares of the S&P 500 to purchase 1 ounce of gold, okay? So from 1980 to 2000, gold performed horribly and stocks performed very well. Prior to that, though, same thing. Coming into the 70s, the value of gold was not very much. 0.42 somewhere, we from 1960 to 1970, we ranged in this about zero point 0.3 to zero point 0.6 ounces of gold for one share of S&P 500. So one share of S&P 500 was worth much more than an ounce of gold. But once this high inflation environment kicked in, people started to get spooked and started to buy gold. And not just people, but central banks all over the world. Gold became a very precious commodity. And over the course of 10 years, we had this huge run up in the gold price. So, what I think is going to happen moving forward, let me come over here and fast forward to where we are at. Okay. Now, if we look at 2000 to where we are today, 2022, we have this kind of massive appreciation again in gold up from 2000, so the end of the dot-com bubble, to 2011, which was the end of the Great Recession. It was a bad time to be in stocks. Okay, the value of gold went up to 1.65 shares of the S&P 500 equals 1 ounce of gold. So you needed more stocks to buy the same amount of gold. After 2010, that number comes back down, and it comes back down to this 0.47 level. Okay, now bear with me. I'm going to go back over here, and what does this little peak look like? To me, it looks like the precursor before the big kickoff, where gold is going to appreciate very, very rapidly against the S&P 500. Right now, we are in this zone, and I think we have bottomed, and I think you're going to start to see two things happen in the next. This was from 76 to 80. In the next 4 years, okay, so this isn't going to happen overnight, but in the next 4 years, we could see gold skyrocket compared to U.S. equities if it plays out like it did before. And how do I get rid of these lines? I want you to go away. I need to learn how to use TradingView, guys. Nonetheless, no, I don't want to draw. I do not want to draw. Okay, nonetheless. So we're going to go over here. We're going to zoom out. No, dude, fuck off. Oh my god. I hate my life. I apologize, gentlemen, ladies, whoever's watching this. Okay, so what you're seeing is, if we take a line off the top of the peak in 2013, and we look at comparatively how well they did, we can see that this trend, this line that measures the peak to the next peak where it touches, is the gap is narrowing in here. And this chart is, I believe, starting to reverse. It's bottomed out, and it's going to start coming back up here. And it's going to do that hockey stick. It's going to take off very vertically. And it's 2023. If we play that out to 2027, we could be up here again at this 0.7, at this 7.0 S&P 500 shares for 1 ounce of gold. And this may be a crazy price prediction, but if we 7x the price of gold right now, let me get my calculator out. It's $2,000 an ounce right now, give or take. If we 7x that, so 2,000 times 7x, that's 14,000. Okay, so that could mean a $14,000 ounce of gold. Is that practical? I don't think so. But what can happen is the price of gold may not 7x, but it may 3.5x. So if we say 2,000 times 3.5, we get $7,000. And what can also happen is the S&P 500 can depreciate 3.5 times. So you could get a 60% pullback on the S&P 500 with a 300% increase in the price of gold. And that would mean that you're going to have a $7,000 gold, a $1,500 S&P 500 if it plays out like it did in 1980. And a lot of these numbers sound Star Wars, but it happened before and it can happen again. And if that does happen, you are going to want to be in gold. I'm not telling you what to do. This is not financial advice, but this is my prediction. I do not own a single stock right now. All of my portfolio is in cryptocurrency and precious metals because those are the assets that I believe are going to perform best in the near future. And when I say near future, I'm saying in the next 10 years. I believe that precious metals are going to go on an incredible bull run, and not only is the price going to appreciate, but they are going to reflect your purchasing power. And I think you're missing out on a lot of potential upside in the near future with commodities specifically. The price of commodities has been increasing drastically over the last 2 years, and I don't anticipate that momentum to slow down. Food is up, energy is up, building materials are up. You saw what happened to lumber. Look at the price of copper right now, uranium, soybeans, wheat, all commodities are approaching or close to all-time highs. And I don't think that's going to stop anytime soon. So if I was a loco rico investor, I would start positioning myself more of a large position in precious metals. I hope this wasn't too confusing for you guys. This is my first time doing a analytical chart video. Hopefully you enjoyed it and got something out of it. If not, leave me a comment. Give me some bad feedback because I want to grow. I want this channel to grow. So please enlighten me if you did not enjoy this video. If you liked it, share it with somebody else. That's all that I ask. Till next time, we're out.